What is a short position? A short position is created when a trader sells a security first with the intention of repurchasing it or covering it later at a lower price. A trader may decide to short the security when she believes that the price of that security is likely to decrease in the near future.
Well, since it's popular to poop on California right now, I've decided it's time to make another half-assed video. I can go on forever on why California sucks. Taxes, 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 homelessness, crime, extreme housing prices, bureaucracy. God, I hate bureaucrats.
It's a figure of speech, Morty. They're bureaucrats. I don't respect them. Just keep shooting, Morty.
And regulations on top of regulations. And of course, none of these are political. If you want to know more about why it sucks, go watch someone else's video. Graham Stephan did a great job at explaining why California sucks. Me, you the viewer, and the 226 big brain subscribers that I have, we're all here for another reason. We're like the vultures circling around a sick animal, just waiting for it to drop. We want to make big tendies from the coming California apocalypse. So essentially, what is California? Land. It's land. It's just one big state on the west coast. It's land. So, what can you do? Well, the first idea is you can go all big short on this and short the California housing market. But the housing market is just as corrupt and broken as it was in 2008, as it was in 2008, if not more. So even if you are right, you're still wrong. So it's a lose-lose situation for you, even if you are right, which is ridiculous. But thinking real estate is a good short for is a good way to profit from failing California is actually a good idea. Just you can't do it through real estate. So here are two different REITs that are super California focused, and I think they will start showing cracks that you can actually profit on before any other housing will. Keep in mind, I am not a financial advisor of any sort. I'm not qualified or certificated or anything. So I'll probably lose you money, so definitely check with a financial advisor before you do anything. So here are the two REITs. If you don't know what a REIT is, I'll link my my what is a REIT best. I'll link my REIT video in the description below. Check that out if you want to figure out what a REIT is before you decide to do any shorting of these REITs. So the first REIT is Essex Property Trust, which is ticker symbol ESS on the New York Stock Exchange. The second REIT that is super California focused is Kilroy REIT. Kilroy REIT trades as KRC on the New York Stock Exchange. Coincidentally, both these REITs are doing very poorly right now, but that might have a lot to do with the coronavirus and less to do with California housing market, but it's a little bit coincidental. And I think someone quoted once, there are no coincidences or something, happy accidents. I don't know. Both Kilroy and Essex are super California focused, and they have little diversification within the rest of the United States. So if anything happens in California, they will show the first cracks. If people leave California, there will be less renters. And if there are less renters, then companies and landlords can't charge as much for rent. So they're gonna bring the rent prices down. And then when the rent prices come down, the profits come down. And when the profits come down, the stock tanks, and then all their investors get depression. Shorting stocks can be very risky, very dangerous. So if you're risk adverse, there's a much easier way to profit from a rotting California. If you're in a position to buy some property right now, then I recommend these three states: Nevada, Oregon, and Arizona. You know what they all have in common? Borders with California. Californians are looking for a place to escape California, but truth behold, California is actually a really nice place to live with nice weather and a nice climate. So they want to stay close to California, even though they want to leave California. Even states like Washington, Texas, and even Idaho are receiving a surge of Californians into their states. But you sell your shanty in California for $1 million, and then you buy a mansion in Idaho. So I don't blame them. So those are all the real estate ways you can short California. But there is one more way that I'm going to talk about in this video. Shorting California Municipal Bond ETFs. A mouthful. But if you don't know what an ETF is, I will link it in my description below with the other videos. And I got 2 videos in the description now. But an ETF is a collection of a certain asset. And in this case, it's a collection of municipal bond ETFs from cities in California. So there are 3 California municipal bond ETFs. One is CMF by iShares, one is PWZ by Invesco, and the last one is FCAL by First Trust. Shorting these will be putting a short on every town in California. Like, I'm not gonna lie to you guys, there's not a whole lot of different ways you can short one specific state. And shorting California kind of means that there might be a bigger problem with the USA as a whole, because California has the biggest GDP in the USA. So if you want to go about shorting the USA, well, that's another story. That's a rabbit hole that you don't want to go down. Like, you gotta get the tinfoil hat on and you're living under an overpass begging for change to go buy Campbell's soup. But yeah, shorting California presents a risk that there might be something bigger going on. So that's it for this video. What do you guys think about my gray on gray? I'm doing the whole do school from home thing. It's awful. I hate it. I also like it at the same time. That's another video topic, eh? I can make a video out of that. Anyways, thank you for watching. Have a good day. Good luck in the markets, everyone.